Good evening, everyone. My name is Yogesh. Thank you so much for attending this webinar. We used to do a lot of seminars, and now we have switched to webinars, looking at what is happening these days. A global pandemic has hit, and there are a lot of people who are still out there. They want to know how the markets are performing, where are the opportunities. So we have made sure that at least we keep doing week-on-week webinars as well for them. And the idea of doing a webinar is first to make you aware about the current opportunities in the market. So the very topic of this webinar was discovering the winning stocks of 2020. Now, obviously, the way 2020 has been going, from the very first month, from Australian bushfires to earthquakes to volcano eruptions, moving further to the coronavirus pandemic, we saw a lot of events happening: cyclones, locust attacks. Then there has been like a lot of unrest in US regarding the civil rights. So now, month on month, we see a lot of volatility in the markets. We see stocks moving up, we see stocks going down. Among all these sectors, should we continue to stick to the Apples and the Googles or Microsofts, or we can even explore to some different areas? Now, last time when I conducted this webinar, we talked about companies like Dropbox. We talked about companies like Boeing, Airbus, etc. Today, we'll also talk about stocks, but this will be a different stocks which we did not share last time. And this portfolio has been made today on request from some of the clients, and we'll be discussing about this portfolio as well. So the very first point will be understanding which sectors to concentrate in these kind of markets. So we have few sectors which are on the verge of recovery. We'll talk about how the situation has been. Okay. Right now, I see around 18 to 20 people who have already registered, and we'll start our session now. Please make sure if you have any questions popping in your mind regarding the current trend of stocks, commodities, please do write it over the chat. I'll try to answer it if I have any information about it. If I have no information about it, I'll talk to my research guys, and they will come back with an answer, and your relationship manager will be there to assist you with that. So please feel free to ask questions about commodities. If you have any other questions regarding indices or stocks, we'll always keep a note of it. I'll try to answer as many questions as I can. Now, before I start, I would like to thank on behalf of uh, Century Financial, uh, my entire team and myself. Uh, Thank you so much to everyone who's out there working in healthcare industry and medical industry, doctors, people from the first responders, from the medical industry. If you have any friends, family, anybody out there who's risking their lives for us, thank you so much for doing this. This is a pandemic. I hope everybody is either whether they are at home or office, you're keeping yourself really safe, taking proper measures to boost your immunity. Please continue doing that. Health, there is no bigger wealth than health. I think all of you agree with this. And with this, I start my session. As I said, please write if you have any questions. Now, I see a lot of familiar names right now, and I think you all have attended either the Investor Education Week or my previous webinars as well. The idea of conducting this webinar is to make you aware about the current opportunities. Markets in last 1 week, the stock markets have been very positive. There have been, let's take a recap what has happened. After the pandemic hit, we saw a big decline in a lot of companies, a lot of sectors. You must have seen sectors which are related to airline industry, travel and tourism, hotel and resorts, gaming. These kind of companies, they started coming down. And the sectors which were related to pharmaceuticals, medical industry, healthcare sector, then e-commerce, these kind of companies, they went up. You see stocks like Amazon, Johnson and Johnson, Moderna. These kind of companies, they performed really well. Now the situation has changed a bit, and when I say change, that means in last 1 week markets were up. Today again we have started seeing a decline, And we have seen, we have pointed out few sectors. So earlier, if you would ask me 2 months ago, which are the sectors to concentrate in this market, any sector other than airline industry, tour and travels, any sector which is related to hotel and resorts, luxuries, these kind of companies could have been avoided. Now, markets have started reopening. You have seen in UAE, the malls are open, the offices are open. Around the world, the lockdown is about to get over. In India, of course, the cases are at its peak, so the lockdown has been extended to 30th of June. It might get extended, we never know. But all around the world has reopened. And as a response to that, we have seen markets also going higher, right? So I'll also share you the live platform, and we'll just have a look at different kind of products which are available and which you can invest into. So the very first part, I will cover the stocks which we are expecting can do really good. Again, these are particularly when we talk about the stocks. These will be the expectations. We as consultants, we do a lot of research work. uh, the research team is highly qualified. We get into the most, um, there is a lot of statistics, a lot of data we work on. So the idea to show you this particular portfolio is not to pressurize you or entice you to buy all these things. This is just update on how the market appears to be, an update on what kind of sectors you can focus on. Depending on your risk profile, on your investment size, you should approach this. Okay. That being said, please make sure these kind of investments, these are subjected to market risk. What I am telling you today is based on the current market scenario. The fundamentals, they have a way of working. Maybe tomorrow the fundamentals are different, maybe today the fundamentals are different. So that's why, please do not borrow money from anyone and invest into the markets. Do not take higher leverages. Please do not think about, I will take a high leverage and I will make a very big profit. You cannot make overnight money, or there is no guarantees. There are no assurances and guarantees in these markets. So you have to be very smart. You have to manage your risk. The market consultants, they assist you in updating the markets and making you aware of the risk management measures. Right now, to begin with the very first part, which is understanding what sectors to invest in. Second part will be about the share baskets, which is a different product line altogether. And then we'll talk about the impact of interest rates on the economy. And it's the most important day to talk about it, because today is a US Federal Reserve meeting, the central bank meeting, where they will talk about the interest rates again. And that can be a game changer for stock markets tonight. Whether it can go up or down, that will really depend on how the interest rate works out. Now, to start with the kind of stocks or portfolio we are looking at, so we have come up with something called recovery stocks. Now, recovery stocks, why we are naming it recovery? So formally, this portfolio, the one which I discussed it last time, to make sure that the content is a bit different from what we talked about last time. This kind of content is about recovery. Now, earlier when I discussed a brief recap, the portfolio which I discussed before was mostly about uh, the dividing it into defensive stocks, dividing it into tech stocks, dividing it into recovery stocks. So when we talk about defensive stocks, we talked about yes, somebody mentioned it, Dropbox, Slack Technologies. So we talked about these companies last time, that Dropbox has a very good platform. Their cloud computing is not done through any external website like Amazon Web Services or anything. They are coming up with their own cloud computing platform. That means it can collaborate a lot of remote, like we are talking about Zoom, we are talking about Slack. Dropbox has the ability to collaborate with all these technologies on one platform. You don't have to switch. So Dropbox was one of the stock which we talked about last time. We talked about Slack Technologies. Slack Technologies was a company which was, if you're working on a project within your team, Slack Technology app, it enables you to combine small groups for those relative projects in within your company. So your team is connected to you continuously on a remote platform on for that specific project. So these were the stocks which we talked about last time. Now this time we're going to talk about only about the recovery sector. Since market has also come down today, we'll talk a bit about recovery sectors, and we will see that how it works out. Now moving further, first thing we will talk about Delta Airlines. Now, Delta Airlines is a company. It is based in US. Again, it's a airline and industry stock we are talking about. So, Delta Airlines. We initially, when we were talking about Delta Airlines, we talked first thing about Delta Airline was that the month and this entire year, 2020 to begin with, it has not been really easy, especially when you see for hotel owners, also for operators also, it is not something which is easy. But right now what we can see, the airline industry has also suffered a lot. Okay. Now, if the airline industry has suffered a lot, that means all the airline industry, we saw Boeing, we saw industries like Delta Airlines, we saw Southwest Airlines, all these companies, they suffered a lot. Now, just have a look at it. What you're looking right now, the first market cap. Now, market cap of Delta Airlines is around, we are looking at in millions, right? So we are looking at these different numbers. You look at 52-week low, for example. Now, if you look at 52-week low, the lowest price it has come is around 17.5. Okay, while the 52-week high is around 63. Just let me confirm this price 1 second. So you can also check through our platform. Just 1 second. Yeah. So what we have seen in the past is, and I'll also share the chart with you. So I'm opening the chart at simultaneously while I'm talking about this stock also. We saw Delta Airlines, it went down to 17.5. The current market price is around 31. 52-week low. What does it mean, guys? It means in last 52 weeks. So right now, if it is uh, June 2020. So if you compare it from June 2019, what has been the lowest? 17.5. If you go to 52-week high, 63. Now you can also see the Bloomberg analyst recommendations. Bloomberg analyst recommendations. So let's say if there were 19 analysts which did an analysis on this stock, 11 out of 19 they suggested a buy, out of which 8 of them suggested a hold, which means if you have bought it, just hold on to it, don't enter into any new trades, but nobody recommended a short sell. So sell means if they're expecting that the stock will go down, they suggest a sell. Then you can see from its 52-week high, it is almost down. If you compare the current market price, it is 31. From its 52-week high, it is down by 51%. Right? So the point is, when we talk about a stock which is available at a 51% discount, why it is an interesting area? The first question which should come in your mind, okay, it's airline industry, so should I be looking at it or not? 2 months ago, you should not be looking at it. But now, when we are talking about this, we should keep a check, because see, Delta is one of the largest airlines in the world. And if you see from the position of strength, it has entered, obviously, when it entered into a crisis, it was still strong. There, if you see the balance sheet, obviously there is a debt which is weighing down their balance sheet. But if you see now, they have their free cash flow, net income, higher margins, which are still better. Now, Delta has stopped their dividend, but you have to understand that US government, they own 1% of this company. And the company is spending more than $50 million in cash every day just to keep the lights on, if I were to tell you. Now, let's talk about the good news. See, their free cash flow, net income, whatever was there, it weighed down heavily by their debts, right? Even if the US government owns 1% of this company, the company is still spending a lot of cash. Now, what about the good news? The good news is that air travel has begun. In May itself, it has begun. So the lowest, which was around 17, stock has moved up to $31. If you see the number of people passing through airport security checkpoints, they have actually doubled over the course of the month. So just take a number. Like last week, same amount, Wednesday or Thursday, around 400,000 people, they passed through the checkpoints. and that has been the highest since March. So now if you see in March, day on day, you would just see like 80, 90,000 people passing through those test points. Now, last week we saw around 400,000 people, right? So that is something again, which is a good news. There will always be doubts about the proven track record, their strong earnings, the company's dividend has been suspended. But when we talk about a discount factor, which is nearly 50% in 2020, I think an investment in Delta for a long term, it could slowly heal. So please remember this thing. People will fly for business trips, and now with the air travel open, we always have to keep an open mind that the companies which had a decent amount of track record in the past, they can actually start moving higher. And please remember this also, always prefer domestic airlines versus international. Now, international ban is also on the verge of getting removed, but companies like so Delta, companies like Southwest also always keep a check. Companies like we were talking about Southwest Airlines last time, and Southwest Airlines has also moved up. If you see week on week performance, week like last week when I talked about on Wednesday, and before that, the stock has moved up. Domestic travel in India. I'll give you one example. In India, there's an airline called Indigo. Indigo stock prices also jumped when the domestic travel was started. So you have to make sure that these are not the sectors which are untouched anymore. These are the sectors which are still available at discount, and there's a decent footfall which is happening at airports. Like as compared to a week ago, which was 90,000 per day, now it is 400,000. So this is something which you should take into consideration. Second, now Delta Airlines industry is airline. So I told you which sectors we will learn about, which sectors we can try to identify for 2020. So airlines, cruise lines, gaming, road and rail, retail sectors, restaurants, hotel resorts. These all sectors which you were away from for a while. But now when things are reopening, there's a possibility the stocks which have taken a big battering now can actually start moving higher, or it may start moving higher. So you take a very long term perspective. Please, again, as I said, this is not an assurance or a guarantee. This is something which we have done a research on, and depending on the current market scenario, it could be something which you can also look up to. Now, the second sector is Carnival Corp. Carnival Corp, I presented a portfolio last time. Those who joined my webinar, they would be aware about it. Carnival Corp was one company which we were talking about last time also. From last week till now, for that particular week, till Friday, we saw a positive closing for Carnival Corp. It was like this particular stock, it went down almost by 70%. And you must have read about it also, because there was a massive outbreak of this disease on its Princess line of cruises. And there was a goodwill payment of around $731 goodwill impairment charge in the first quarter, right? So this is something, this particular company has suffered a lot. The stock went down almost 70-75%. Now, a positive news about the stock was Carnival Cruise in May. They talked about resuming the cruise, which was expected to resume in August now. Okay. If you see the bookings of this company, the bookings of the cruise, it has almost went up by 200% from August 2019, if we were to compare. Now, Carnival has sold around 62.5 million shares, and they have taken on additional debt of $6 billion also. And this was, which is like paying off that due, it is due in 2023. Their balance sheets are stronger, and they are talking about again reopening it. So their CEO has actually pointed out that they have so much cash that even through 2020, if it generates zero revenue for the rest of the year, and which is the worst case scenario, for the rest of the year, the company has enough cash. Okay. Now they are resuming this. The order is the no sale order needs to be removed. It is still expected. It is still in talks. And even if it doesn't sell for the rest of the year, 2021, the bookings are so strong, it is already in advance. So this is something, once the restrictions are lifted, again, this particular stock can give you a decent amount of movement as well. Okay, somebody asked me, I've seen that from 4th June, the stocks of Slack Technologies have gone down, but the Southwest Airlines have gone up. So see, it's a last week when we talked about a market which was going higher. And last time also I pointed this out that please be with the trend, don't go against the trend. The fall which has happened has not been a breach of a technical support, that it has broken a support level and it has come down. Fall happened due to a pandemic. So whenever there is a news of markets reopening, we saw stock bouncing back. But what happens? See, by the end of every week, if the market has gone up for a week, sometimes what happens, there are traders who book profits. Now, when they book profits, starts coming down, the markets also comes down. When we talk about Slack technology, see, the focus of investor sentiment moved a bit to the immediate rise of airline industry. Slack Technologies it can be a good futuristic stock. Okay, it can be a good futuristic stock. So if we talk about companies, last time also, if you remember, I put Slack Technology into the technology sector. I did not put into the recovery sector. As of now, many investors, they are focusing upon, you look at the Boeing stocks or Airbus stocks, they have actually moved really high. The growth is like exponential, right? So these are the industry sectors where the investors are focusing right now, because these can be the recovery stock. A good company which is down by 50%, even if it recovers to its original price, and if you enter now, you are looking at a very substantial growth, which is good. While companies like Slack Technologies and Dropbox are much more futuristic, the recovery stocks are much more immediate to focus upon. So that's why you have seen Southwest Airlines have actually recovered from its low, but Slack Technologies was already at a point where it was performing well. So that is the only reason. It is not about a stock being good or bad. It is just about the focus of investors now much more on the recovery sector. So that's why we have done this session, to focus more on the recovery sector. Southwest Airlines belongs to the recovery sector, while Slack Technology depends, it focuses on, it is mostly from the technology sector. Same with Carnival Corp. So as I said, Carnival Corp is something which the stock was battered by 70%. Look at it, 52-week high. From its 52-week high, the stock is at a discount of 60%. Right? So even if there is a recovery, even if there is a recovery of say 15 or 20%, it's a decent amount. Okay, somebody just asked me, I attended your Investor Education Week webinar. Just wanted to know when will day 4 be uploaded on your YouTube channel. I'll just work on it. I'll see. Normally we have uploaded most of the sessions. I'll see whether that session has been uploaded or not. Now, moving on, we understood about Carnival Corp. Now, another stock within the same, not with the same industry, but a different sector. Airlines, we understood. Cruise lines, we understood. Now we are looking at the gaming. And you can see the very first word of this particular stock starts with Las Vegas. We all know what happens in Las Vegas. We have heard about numerously what happens in Vegas, stays at Vegas. Las Vegas Sands Corp. Now, this is a gaming industry. We're talking about casinos now. A lot of casinos were shut down after the pandemic hit. Now, you will be asking, okay, why we are again looking at this particular stock. This belongs to the gaming industry. Now, for gaming stocks, Las Vegas Sands Corp, it was one of the best stocks. Now, it seems like the worst could be over. There is a point, it is expected that from the very worst of it, now the LBS stock, it can actually start moving higher, not if from the Asian Pacific market. Because in 2019, this company, it generated 85% of its revenue from the operations in Asia Pacific market. Let's say Macau, Singapore. These were the cities from like around these regions where most of the revenue of this particular company was generated. And I have been to Macau. I'm sure most of you must have visited different parts of the world from the casino industry. If not, you can always go. See, in Macau, it's not the first time for people in Macau to be dealing with a pandemic. Like in Asia, the population is much more adaptive. And despite all the doom we are talking about, apocalypse and world is going to go end and everything. In Asia, the population is very much more adaptive when it comes to pandemics. You must have seen, like in many parts of India, forget about India, I had so much hard time explaining my parents that why they need to wear the mask when they go outside. For them, it was like, okay, it's flu. Happens. In India, it happens. It's okay. It's just flu. We'll get over with it. But then slowly, they realize that no, it's virus. So they started taking all the precautions. But this is something which Asians are very much adaptive to. So now we are expecting that Asia should rebound, and first benefit will obviously may reach to this particular company. It is one of the most heavily exposed companies among the US casino names as well. The revenue comes from mostly from Asia Pacific also. Now, in East Asia, their full operations will be back. Maybe there is a possibility that it might reach to its pre-pandemic peak. Now, the pre-pandemic peak was, so let's have a look now. What does the stock looks like? See, Las Vegas Corp 52-week high was 74. Current market price is 52. 52-week low is around 33. Look at the analyst recommendations. Out of 20 analysts in Bloomberg, 16 of them have suggested a buy. 4 of them have suggested a hold. From its 52-week high, the stock is down to 29%. Right. So this particular stock is available at a 29% discount from its yearly high. So we are looking forward for this particular company, and this belongs to different industry. So I'm telling you again, different sectors, keep a check. This portfolio soon, if you talk to your relationship managers, it can be provided to you as well. We are already trying to do more and more research on this so that we can convey these to the clients as well. Anybody who cannot hear me properly, or if there's a problem in my audio, please don't worry about it. This session will be uploaded back to YouTube, so you can always go back and visit what we have discussed about. Moving on, we're talking about another company, Lyft. Now, Lyft, I'm not sure how many of you know about Lyft, but you be aware about Uber. Uber is something which we have all used so many times. Obviously, as of now, we saw uh, very much dip in the Uber stock also because nobody was moving higher. But see, for Lyft, so Lyft and Uber, these two are companies with almost with the same business. Uh, just like over here, we saw Uber and Kareem also. So in US, Uber and Lyft, they both operate. Now, Lyft as a company, they're trying to manage the COVID-19 crisis as best as possible. Expectation is that it will emerge from it stronger, and there is likely to be at least some sort of stabilization, improvement also for ridership volumes from the April. If we see April, we compare April to June, it is expected that the ridership volumes have started going higher. If you see, even their social and business transportation demand is recovering faster than expected, right? So, and see, it's a very basic thing. So every company which we point out, let's talk about the common sense. Today, if you know that there is a pandemic out there which you're not supposed to be close to each other, you would always go with much of a prefer a private ride to confirm with the social distancing norms. Social distancing, I'm not sure how many of you are thinking that there will be a vaccine tomorrow or day after. Please remember this: social distancing is the new normal. We have to live with this. So, with social distancing coming in, there will be a lot of people who will avoid the public transport. So, for them, a private ride is something which can be preferred. In US, if you compete between Uber and Lyft, as I was talking last time also, like how over here it's either do or etisala, right? In US, it is either Uber or Lyft. But when you do a survey, you will see that Lyft has been gaining a market share. They are much more focused. Their team is much more innovative. Profit generation potential is higher. So we have seen that there are a lot of positive responses, and a lot of people prefer Lyft or Uber. So that's why we have put Lyft as one of the important recovery stocks here. And if you see, again, let's focus on percentage dip from its 52-week high. We are talking about a 44% dip from its 52-week high. Look at the analyst recommendations. We are talking about out of 38 Bloomberg analyst recommendations, 25 of them have suggested a buy and 13 of them have suggested a hold. But so far, no one has suggested a sell. Now, next to move on, we are talking about retail and restaurants. So if we talk about retail, for example, we are talking about Simon property. Now, see, retail sector, you will always see that retail sectors or different companies, in fact, in retail, they have suffered a lot. Malls were closed, So again, we are talking about a very basic understanding that if malls are closed and we are talking about malls reopening, so retail sector can also get a decent bounce. In fact, I'll give you one example: Adidas, or see the what happened at the very first day when the malls opened. The sales in the retail stores of Adidas or Nike or Under Armour, the sales just started bouncing back. Obviously, the sector is different, but then when we are talking about the retail sector, we are looking at all different kinds of stocks. Low, then it's 52-week high. The stock is down almost by 51%. Right? So this is from the retail sector. Quickly, we move on to the restaurant bit. Talking about the restaurants. Not sure how many of you still ordering from Zomato. Those who cannot live without who's how should I put it in a very neat way? Those who are following their taste buds and they are slaves to their taste buds, they would still be ordering food, I'm sure. Restaurant industry took a really big hit during the pandemic, and now we are coming back with restaurants in the recovery sector also. See, Darden Restaurants is the name of the company. Now, Darden Restaurants, it's a company that operates multiple casual dining brands such as Olive Garden, Longhorn Steakhouse. Like these are the companies which are still there. Now, Darden has seen its stock decline by about 30%. If you see year till date, the stock went down almost by 30%. Year till date means if you see from January 2020 till now. So when I say YTD or year till date, that means from January till the current month. If you compare to S&P 500 index, it is down by 5% because demand for dining out, it just collapsed. Nobody wanted to go out and eat, right? So there was a bigger loss to this particular company because we have seen going out and eating was a no-no. So that was something which put this stock down. Now, what we are looking at is if you look at the long-term outlook for the company, it looks promising, very much intact, making the stock relatively attractive at these levels. Because eventually, when the pandemic wears off, there could be a pent-up demand for dining out, and this could really help demand rebound. Because, like for example, normally if there was a holiday or there was whether you're talking about Christmas or whether you're talking about Eid, whether you're talking about all of the festive modes or weekends for that matter, we would always see people stepping out for an evening out to a restaurant to enjoy a lovely meal. So now once the pandemic wears off a bit and sector starts regaining, we see these particular companies also might recover. Now there are a lot of restaurants, the smaller restaurants, which are unlikely to survive the current crisis. So you have to make sure there are players like Darden which have a giant market share. They have gained a lot of market share. But imagine this: if the smaller companies which are already under the pandemic and the smaller companies which cannot survive, the other companies which are able to survive, their market share will start moving higher. So if I am a restaurant which have been which somehow survived the pandemic, but my competitor did not, so obviously now that particular competition is gone. So I'm having a larger market share. So this is also somewhat is happening with Darden Restaurants also. So the stock is down from its 52-week high around 39%, and again we have put this into the portfolio of the recovery stocks. Similarly, moving on, we are talking about we'll talk about a few more sectors. We are talking about hotel and resorts. We're talking about aerospace and defense. We are talking about Rolls-Royce. So let's talk about aerospace and defense also. Let's try to cover this topic faster so we can we can do a bit of platform training also, try to understand how to buy, sell these shares. And at the same time, we'll try to talk about the interest rate decision which is happening today in the evening. So if we move on, let's look at a few other stocks also. So, okay, let's jump onto Airbus, for example. Now, Airbus is aerospace and defense area. So we are looking at Airbus, just like Boeing. Airbus is also a company. It's a European plane manufacturer. So when you talk about US plane manufacturer, think about Boeing. When you talk about European plane manufacturer, talk about Airbus. Now, in May, there were no new orders recorded because every company, whether it is in the Airbus industry, airplane industry, they had to adjust to the very harsh reality of all the airlines being cancelled or their orders were being deferred. New planes, nobody's buying any new planes, no airlines in buying any new planes because they want to save cash. It has already forced this particular company to lower its production schedules. They have cut so many jobs. So now Airbus is not only they have lowered its production schedules, they have also cut thousands of jobs. Now, in last 10 years, again, this was something, all these orders, now they have started creating a backlog. March and April, if you see Airbus stocks, they were down at multi-year lows because losses started getting higher. But if you see now, in last few weeks, we have seen the stock has rallied around 40% from its lowest point. So whatever was the lowest, and I'll show you the chart. So that's why I just want to finish this portfolio early so I can show you the charts of these companies also. From its lowest point, this company has rallied around 40%. Rallied means it has gone above 40% from the lows because economies are now reopening. Market has already discounted, and this is where the market is discounting the pent-up travel demand. Now, once the demand for air travel it comes close to pre-pandemic levels, these airlines will start to buy new aircrafts. The different airlines which exist, they will start buying new aircrafts. European airlines like Lufthansa and others. So we might see again a big bounce in these companies. Majority of their fleet is under warranty, not as susceptible to breaking down. Now, furthermore, if you look at the investor sentiments, now investor sentiments is the most important thing. Why? Because market runs on sentiments. Talk to anybody, whether it's Warren Buffett or anyone, will tell you the same thing. That first thing is market always runs on sentiments. Now, investor sentiments have been pretty upbeat because I told you the footfall in the airport checkpoints we have seen it has almost tripled since mid-April. So with massive barriers to entry in this industry, Airbus is kind of poised to reclaim its previous highs in the long run. Again, I'm talking about recovery stocks. I'm talking about a long run. How many companies do you know which are supplying airplanes to different airlines? Boeing, Airbus. There may be more companies, but which ones do you know? Boeing, Airbus. So the given names, there are not many, there is not much competition in this particular business. So that's why Boeing and Airbus, again, I pointed out Boeing also last time, maybe or maybe not, but Boeing stocks have also been going higher for a while now, and so has been Airbus also. We'll take one or two more stocks in a elaborative way, and then again, you can talk to your relationship managers about this portfolio as well, and they can send it to you. So if we see some more stocks, let's say, okay, we discussed one advertising. Okay, we discussed about aerospace. We discussed about hotel and resorts. Okay, let's take one hotel and resorts. We have not discussed about hotel and resort industry. So if we look at the stocks, like for example, okay, let's talk about instead of core, maybe let's talk about Hilton, for example. Then we'll talk about Rolls-Royce also. Now, we all know Hilton. We are now entering into the hotel and resort industry. We have not discussed it yet. Now, see, for 2020, again, it's not, it has the worst month, a worst year for hotel owners and operators. If you remember last week, I came up with one company. I don't remember the name, that particular company, which was open throughout the pandemic because most of the people who were using that resort or that not the resort, that particular hotel, they belonged to government and they were medical employees. So that's why that particular company was in the list of the recovery stocks also. So similarly, now when we are talking about Hilton, it's a different. We are talking about hotels and resorts. Hilton. An owner and operator, Hilton has around 6,000 hotels. around 118 resorts in these countries. That meant when during the pandemic, the revenue dropped nearly 13%. The net income came down around 88%. If you see the occupancy levels globally for their hotels, it hit a low of around 13% during the first quarter. Now, it is expected Hilton might expect a much more dramatic impact on its second quarter results. But you should remember that companies' balance sheets still look very secure. See, this is a part of fundamental analysis. When you're analyzing a stock, you obviously assess the current situation because that's the most important thing: the earnings, the net incomes, the possible impact on the revenue of the company. But then you also look at the balance sheet because this is a temporary situation which we are looking at. But what about their balance sheets? They have 6,000 hotels in 118 countries, different resorts in 118 countries. The balance sheet looks still very secure. They have, oh, like every most of the companies, they have lowered their executive salaries also. So if you see the two-thirds of corporate workforce that it has always been for now it has been furloughing. Uh, Non-essential capital expenditures have been reduced. So now, if you see, whenever there's a reduction in the cost of several things or cost of cash, lower salaries, the balance sheet also starts improving. Now, there is a small ray of hope. If you see the worldwide occupancy since the pandemic till now, it has actually gone up by 23%. Almost around 150 of its Chinese locations have reopened. So they have different locations around. In China itself, they have around 150 locations, and they all have reopened. It was now China. There are different thoughts about China at this point of time. We'll not get into it, but you have to understand that China was one of the earliest countries which got hit by the virus. And then they have seen a sharp rebound in the occupancy rates. Also, in February, the occupancy of such hotels of Hilton in China was around 9%. It fell to 9% in early February to almost 40% as of May. So, which was 9% in Feb, by May, it has reached to 40% increase in Chinese locations, right? It is still below the pre-pandemic levels, but it is a kind of encouragement and enough to make you think about whether this could be the industry you can look into. The stock is already down around 30% from its high. Most of the negative news which would come, it has already been discounted as of now. So shares looks pretty attractive after the decline. Hilton has a reputation, they have a track record, they have wide range of hotel properties also. And it kind of gives a kind of advantage to the company as compared to the weaker competitors. Again, guys, one important thing, please understand this. You're not just looking at one company, you're also understanding what reputation this particular company holds when you compare it to the competitors. So if Hilton has a reputation, they can still survive the pandemic. But what about the other companies which are not as big as Hilton? When they go out of business, this particular company will try to gain a market share out of it, right? So that's why you have to think about a longer term. Think about investing into these kind of stocks. They might recover, they might do again well. These are renowned names. We're talking about Deltas and Carnivals and Lyft and Airbus, or we're talking about Rolls Royce. We're talking about companies like Hilton, for example, right? So this is something, again, I would suggest you take a picture of this particular portfolio. However, your relationship managers can also send you the market commentary on it and the descriptions on it. uh, there are stocks still like Rolls-Royce, for example. We'll just take one more company, one more sector. So we covered Delta, we covered Carnival, we covered Las Vegas Sands Corp, we covered Lyft, we covered Simon Property, Darden Restaurants, Hilton, Airbus. We also have to cover Rolls-Royce. Now, many of you must have known, or at least by the logo, you must know what Rolls-Royce is. But that Rolls-Royce logo you don't see only in the car. Tell me, where else do you see a Rolls-Royce logo? Just type on it. You can type it. Everybody has been quiet for a very long time. I'm sure. I'm not sure whether I'm audible or not. But let's take a small interactive session. Where have you seen Rolls-Royce logo apart from the car? Anybody? Think of it. Think of it. You have seen it somewhere. Where have you seen it? Okay, I got one answer. Anybody else? Okay, I got two answers. I have 18 people. Okay, think about it. Think about where you have seen this logo before. Okay, so most of you replied with yes, airplane engines. When you sit on a window seat, you see outside, you will see, okay, this one. So once you see Rolls-Royce, there is one more logo, and it is not of Rolls-Royce. Which one is that logo? There are two logos. If I'll tell you, you will remember it. Okay, I got one reply, Space Tech. There is one more logo which you see. Sometimes you see Rolls-Royce, sometimes you see a different company airplane engine. Which is that sign? Think about it. Yes, I got one answer. That is right. I'm just waiting for somebody else to point that second company out, which is another company with Rolls-Royce. Pratt and Whitney must have heard about GE. So sometimes you see Rolls-Royce, sometimes you see GE logo also. You see a lot more engines as well. But Rolls-Royce and GE, it is very easy to recollect. So GE is also one company which is involved into this particular. Now, when we talk about Rolls-Royce, so as we know that Rolls-Royce also, it is one of the largest suppliers of jets for aircrafts in the world. But you will be surprised, Rolls-Royce does not make much money on the sale of each engine. Instead, this company relies on a lucrative after-sales service contracts, which are based on the number of hours flown by the aircraft. Now, with air travel coming to a standstill, the profitability of Rolls-Royce, obviously, it will be severely impacted. We'll see this quarter, next quarter, we'll see. The profitability will be severely impacted. And this has already been reflected in the share price because investors almost lost 70% of their wealth year till date. Worst has been discounted by the markets now. Countries with reopening their economies ahead of expectations and given the huge pent-up demand for leisure travel, tell me, so many people, they used to travel throughout the year for something and I've seen this in Dubai. Many times I call any of my clients or for something, I always get to hear, I'm traveling right now, call me back. I'm traveling right now, call me once you're back. So everybody here, at least in Dubai, I have seen so many people traveling, leisure, business, everything. So now with worst being already discounted in the stock value, let's see. It's why I want to discuss Rolls-Royce was you see this 62% down from its 52-week high. Okay. Now also, if you see the analyst recommendations, it kind of a mixed bag because after 21 analysts, 6 of them suggested a buy, 8 of them have suggested a sell. The sell means they are not expecting the stock to go up. 7 of them have suggested a hold. It's a really mixed response to analyst recommendation, right? If you see others, you will see most of the analysts, they suggested buy to these stocks. But why we have still put Rolls-Royce there? Because see, as we said, that there could be a huge pent-up demand for leisure travel. The service stream of income should start picking up in line with the increase in air traffic also, right? So you also have to maintain the social distancing norms. Now, airlines, if you're maintaining the social distancing, airlines will not be able to fill out their seat capacity. So that is one thing, right? Because you keep a gap between the seats. This also means that the number of hours flown will return to the normalcy at a faster pace when compared to the number of passengers traveling. Remaining 50% of revenue is mainly derived from power systems and defense, providing a degree of diversification. So there is a diversification also. 50% of the revenue is being derived from power systems also. So they have a great liquidity. If you compare to the liabilities, they are pretty much liquid. The liabilities could be around £1 billion, but their liquidity is around 6 billion, which is a good thing. There is a lot of uncertainty, guys. To be very truth, I'm not saying that there's no uncertainty. There is a lot of uncertainty here, but it is still one of the world's leading aerospace and defense companies. and this is unlikely to change anytime soon. So with that being the case, Rolls-Royce share price could be a great way to, play the global recovery card here, right? So with this, we have understood our recovery stocks. Okay. Now what we'll do is we have some time left. We'll try to understand. Uh, One is this way that you can invest a portion of your portfolio into recovery stocks. Then what about the future? Now there are a few stocks which could be futuristic, which I talked a lot about in the last session which I had. But now I will take you through a interesting product line which we have come up with. This is the product which has come. CMC Markets, which is the broker with which normally which provides you the access to global stocks and commodities to trade. They have come up with a product which is called share baskets. Now, share baskets uh, is a way where you can invest into different themes. How to do it? Let me share my screen with you. So, guys, what you're looking at right now, this is a trading platform which can help you to invest in the market. Anything which you're interested in, whether it is stocks, commodities, currencies, indices, exchange traded funds as well. This will be one single platform under which you can get the entire exposure. So you can look into this particular platform. Um, how many of you can read the price of Delta Airlines? Just want to check the visibility of this. Just give me a okay. Will be just write okay if you can see it. If you want me to zoom a bit, if the numbers are not visible to you, then I'll zoom my browser. Can everybody see the numbers properly? Delta airline price, if you see on the right corner, the prices, they are flickering. You see buying and selling prices, you can see. Okay. Most of you have said you can see it, so I'm going to keep the size similar. Okay, someone just said zoom. So, okay, wait 1 second. I'm just going to zoom this by 20%. Okay, I've just zoomed it a bit. Now, this particular platform, it allows you to take, okay, yeah. Now, this particular platform, it allows you to take leverage and trade. Leverage again, for leverage, if you want to understand a one-on-one platform, how to use the platform, I will be available for a one-to-one session, and I will tell you all the features about the platform. For now, we'll just understand what kind of products are available here within this particular platform. Now, you can easily go to the product library by clicking here. So when you click on product library, you see this particular window is open, in which you can see different commodities. When we talk about commodities, commodities are your natural resources. There are agricultural commodities, like we can see talk about agricultural commodities like rice, wheat, sugar, coffee, cocoa, pork, orange juice, all different kind of agricultural commodities. Energy-based commodities like oil, gasoline, natural gas, low sulfur gas oil. You can also look at industrial metals like copper. Uh, you can also look at precious metals like gold, silver, platinum, palladium. These kind of commodities you can always buy, sell, and invest into. So through this particular platform, you can get an access to invest directly into the metals as well, which or directly into the energy-based commodities or agriculture-based commodities also. Then are your cryptocurrencies. Cryptocurrencies, as you know, Bitcoin, Cardano, Ethereum, Litecoin. Please, this is just for the demonstration purpose. Cryptos are a very high risk asset. Just Forex is also a very high risk asset. But when we talk about cryptos, there is no wide acceptance of the cryptocurrency. So if you have not invested, traded in cryptos before, uh, please be very careful if you're speculating. It's a very high risk asset. So do not, please consider your risk profile and then only do it. It is available on the platform, but talk to your market consultants, do a risk profiling for yourself, and then you can always understand the risk and the rewards in this. Now, moving forward, these are your currency pairs. So we are talking about almost, these are the currencies which are widely accepted. Australian dollar, Canadian dollar, US dollar, Euro, pound, South African ZAR, all different kinds of currencies. As I said, forex market, currencies market, this is one of the most volatile and the dangerous markets in the world because it's fluctuating a lot. Okay, uh, the factors which affect a foreign currency: trade war, Brexit referendums, Brexit negotiations, global pandemics, um, bushfires, export import data, industrial production, GDP, Federal Reserve interest rate decisions, central bank decisions. All these kind of factors, they impact currencies. So definitely, forex is not something which we talk as a long-term asset. We always see currencies as more for a day-to-day trade. So please make sure that if you're trading in currencies, you have put a stop loss, you have covered your risk. Otherwise, you can lose more than what you have deposited. So you have to be very careful. We have to be very careful in taking leverage as well. Then going forward, let's talk about share baskets, which was the one of the main area to introduce you to. So share baskets, when I click, these are the baskets which are formed together with the help of CMC markets by CMC markets. They have come up with something called a share basket. It works like a mutual fund. I'm not sure how much do you know about a mutual fund. Uh, so many of you must have invested in mutual funds before. A fund manager takes all the money together, allocate it into different asset classes, and then the value of that fund goes up and down, right? And it is based on the performance of how the components of that particular fund are moving up and down. That's how a mutual fund works. And I'm sure there are a lot of people, all they know about mutual fund is that mutual fund investment are subject to market risk. Please read the offer document carefully before you invest with that speed. I was also one of them, never taken much interest in mutual funds, but I like the idea of how it works. Your money is allocated into different asset classes, and that fund has a value which goes up and down depending on the performance of those components. Share baskets, when it comes to diversity, sector wise, you're not getting the diversification because it is opposite to what a mutual fund does in terms of sector diversity. Because sector, today you said, now let's talk about futuristic. We talked about recovery stocks, now talk about a futuristic. 5G technology. 5G technology is a future technology which is expected to come, right? Over a period of time, we might see every 4G device can become obsolete ahead of the 5G technology. And there are a lot of companies which are investing heavily into 5G. Companies like Verizon, Qualcomm, these kind of companies that are there. Now, when you're talking about a 5G share basket, as you can see on the top, the first share basket you can trade into is 5G basket. What does a 5G basket does? A 5G share basket has combined around 22 shares together, clubbed together in that one basket. That basket has been assigned a value on the basis of the combined value of all these companies, and based on the performance of these companies, the value of this basket goes up and down. So if you see, the basket value of 5G is $4,370 for 1 unit. So this will go up if the companies which are into this basket are performing well. It will go up, and it will come down if they are not performing well. uh, why share basket can be a good contributing factor? It can be a very good factor if, let's say, you say, I want to invest into all the companies which are into 5G, or 20-25 main companies which are investing into 5G. If you start buying all companies one by one, your per unit cost to buy that particular company will be higher. Okay, so that's why if you buy a basket, you get exposure in all those 20-25 companies, so your per unit cost, it reduces. So share baskets again can be a really good idea. Now moving forward with that, you can see with the same kind of improve, like with the same kind of concept, these baskets have been formed. Automation and robotics basket, which is basically AI. Then big tech, China tech, collaborative technologies, cybersecurity, driverless cars, European banks, gaming basket, luxury lifestyle basket, mobile payment basket. So when I say mobile payment basket, that means Mobile payment basket, they have companies like MasterCard, Visa, PayPal, companies like this, or any digital payment company like Square, for example. So you know the the future of the digital payment. 70% of transactions worldwide still happens in cash. So there's a lot of expectations. There's a lot of potential in these kind of sectors. Then there is a share basket which is related to renewable energy. So for those friends of us who would like to invest into renewable energy, there's a basket for that which combines of the companies which are much more into environmental investing. Then there is a basket called streaming basket. A streaming basket, uh, so far you must have seen one company which really went up during this pandemic. I'll give you a hint. It's a streaming basket. So tell me which company has performed really well apart from Amazon's and pharma companies. Which other sector has seen a really good bounce? You know the name. You also use it, I'm sure. Write the name down. Okay, I got one answer. What about others? You're using it on day basis. Okay, somebody said Zoom, so I still take that. Zoom is one of the things which we are using today, and the stock has went up. Netflix is the answer which we are looking for. So Netflix is actually the answer. Netflix stocks went up. Let's see how Netflix stocks have went up. This is Netflix. Let's understand the pre-pandemic, post-pandemic, how it worked out. So I'm going to show you Netflix chart. Okay, this is last 10 months, but let's focus on, instead of last 10 months, let's focus on last 3 months. Can easily change the duration from 10 months to 3 months. Look at this. So in last 3 months, the stock during March, 18th March, when actual the first lockdown started, from there 292, Netflix, March, April, May, and then June. May, 3 months, hardly 18th March to 18th May. 2 months from 292, stock went to $458 per share right here. From $292 in 18th March, on 18th March, it went in 2 months from 292 to 458. So that is again, that is the power when you're focusing on the right sector, when you are understanding the investor sentiment, because market runs on sentiment. Everybody at home. So there is a streaming basket which does not only involve Netflix, it also involves Disney. Must have known Disney Plus has also come up with a streaming service. There are companies like AT&T. Then there are traditional entertainment companies like Fox Corp, AT&T, and others. So the idea is that when you invest into a basket, you get an exposure to that particular sector and the top companies of that particular sector. And you don't have to buy each company one after another. You can just buy the basket and trade in that particular basket, right? So share baskets, I had to explain it to you, which I've explained it to you. Now, last but not the least, the thing which we had to talk about is the impact of interest rates on the markets. When we talk about interest rates, we are talking about the cost of borrowing. When you go borrow from a bank, you borrow money, you're charged an interest over it, right? Similarly, if a commercial bank like ADCB borrows from Central Bank of UAE, they will also be charged with an interest. So the interest on what that particular bank is charged, when ADCB further lends money to you, they will also charge you an interest. So cost of borrowing is a very important feature. Today, somehow we need debt. Why do we need debt? Today, if you have to buy a property, which is $500,000, even if you're buying it as an investment, you have $500,000 in your bank account. But how often you will take that money out and buy a property with the same value? You will say, take cash, give me the property. Because property is an illiquid asset. Today, if you want to buy and tomorrow you want to sell it, it's not that easy, right? It's not like a stock or a currency. It's an illiquid asset. So what do? You pay a down payment and then you finance it, you get mortgage, and then you keep paying it in installments, right? So Debt has become an important part of our life. When you invest, you borrow. So borrowings can be used for different purposes. You buy a land, you expand your business, you increase your business, you borrow. That's why, because borrowing is so essential, the interest charged on that borrowing is also very essential. Because if you borrow for 15 years, you will keep paying interest every year. If interest rates keep changing, keep going higher, your profitability it gets affected. So that's why when central bank combines with a federal open market committee, the FOMC, what we call it, they talk about interest rate decisions. Now, at this point of time, let me tell you, since the pandemic has hit, global central banks around the world, they have reduced down their borrowing rates. Uh, Countries like Japan and Europe, they are already in negative interest rate, which means if you deposit money, they will charge you for that. Their deposit rates are negative, right? They will charge you for it because they don't want you to keep money in the bank. They want you to put money in the economy within out, spend more. The public infrastructure, the government spending should be increased. Now, when we talk about the today's meeting, what will happen? It will be about the US interest rates. US interest rates are already at a lower point, 10 p.m. UAE time. And I request you, look at this particular news. Those even who are new in the market, take a demo today itself. When this session is over, it will be done in 5 minutes. When this session is over, take a demo from your relationship manager so that you can see prices of gold, dollar, shares, what happens at 10 p.m. And then at 10:30 p.m. when the press conference begins, what happens? Just to tell you, all eyes on dot plot. It's Fed day. Fed day means the central bank will talk about the interest rates today. Already, they have talked about the interest rates. Have been absolutely, people have been following the interest rate decisions a lot. We have seen markets also going higher on the basis of that. Today, all attention will focus back on the extraordinary measures Fed has taken till date in order to keep the markets happy. So, guys, stock market, central bank decisions, they're connected. Fed members have repeatedly said rates will stay low for a long period of time and so far ruled out any possibility of negative interest rates. Okay, negative interest rates are about deposit rates. So the idea is that they have said that they have already told that the interest rates, long-term interest rates, they're expected to be on the lower side, so they will keep it low. And the deposit rates, they have still not talked about making this negative. In Europe and Japan, it has already been negative. In US, it's still not. So maybe today there are different possibilities being talking about. Surprisingly, Fed's own economists are increasingly clamoring for an unprecedented move of sending rates into a negative territory. Now, this is where it becomes really important. Central bank's own economists now, they're probably vouching that there is a possibility that the rates might get into negative territory. So, when an economist with St. Louis Fed, there are different kinds of Federal Reserve in all different states. So, we are talking about St. Louis Fed and Brian Rainbold, research associate at St. Louis Fed, in the report have highlighted the urgency for the Fed to go into deep negative interest rate territory along with aggressive government spending and massive infrastructure plans. Why you need aggressive government spending? Because when governments spend money on people, the flow of cash in the economy increases. It puts more money into people's pockets. It generates more jobs. If I'm building a bridge as a government, if I'm building a bridge, it would need cement, it would need gravel, it would need all kinds of products. So I am buying, consumption is increasing, right? Then I would need laborers, so I'm increasing the employment also, wage earners. So to increase the cash flow, the government spending increases. Now on the growth side, FOMC economic projections, FOMC means Federal Open Market Committee, economic projections are likely to signal contraction this year, followed by moderate recovery next year. Market will also look for any mention on how the Fed plans to tame inflation should it increase rapidly. So these are the factors. They will talk about how to control the inflation. They will talk about what is the mode of recovery. Guys, please remember it. Those who are trading with somebody else in that different platform, for them, message, do not take an instant trade at 10 o'clock, whether rates go up or down. Wait for 10:30 p.m. This is where the real cream comes out, when the press conference begins. Historically, in last 10 years, what I have seen is whenever the rate decision comes, high or low, markets might go very volatile. But the real thing happens 10:30 when the press conference starts, and the Fed chairperson, when that time it was Alan Greenspan, then there was Ben Bernanke, then there was Janet Yellen, and now there's Jerome Powell. When the Fed chairperson starts answering the questions, that's when the market really starts moving. That's where you can identify a trend which has come up, right? So do look for interest rate decision. It can really put a serious impact on US equities and dollar. Most critical importance will be the Fed dot plot. Markets would keenly scan the chart in order to ascertain the comfortability of various voting members with negative interest rates. So they really want to see how many Fed members together are in favor of negative, or how many of them are in favor of not doing these interest rates negative, right? You can easily please take demo accounts. You can easily look into these demo accounts and check what kind of instrument you're interested in. You can track their prices live while the Fed conference is happening, so it will be easy for you to see the impact. Just create a watch list for yourself. How you create a watch list? Click here, create a watch list, give it a name, Fed press conference. Wait, not here. Yeah, here. Fed press conference. Now you add which are the most possible effective instruments. US 30, Dow Jones, which is a US stock market index. So US 30, add this. SPX 500, S&P 500, global benchmark for US stocks, S&P 500. Then you can also take US dollar index, because dollar is the US currency. It can get affected a lot. You go with US dollar index futures, and then you can also add USD JPY, dollar yen. You can also, how can you forget, gold. So friends, gold has given a really wild movement. We have seen gold prices going as low as 1694, 1680, bouncing back to 1712. So the expectation for Fed is to keep interest rates low. The negative interest rate, however, is a surprise, and we'll see if that happens. But gold prices, if you see, so you create a watch list for yourself and just track the movement at 10:30 and 10 o'clock, how it works out, right? Any one of you who's interested in having a one-on-one session with me or with your relationship manager to understand how the platform works, leverage understanding of risk management, short selling, stop losses, I will be personally available even on Fridays. If you want to have a session, I'll be available. Just talk to your relationship managers, and it will be done. So nothing to worry about it. The copy of this webinar will go to YouTube as well, so you can see it anytime you want. Once again, the stocks which we discussed about, the recovery stocks, please read more about it from your end. Talk to your relationship managers, ask for these portfolios, and they can help you out with. That being said, once again, the most important thing in this pandemic is to be aware about things. You're aware about what can harm your health, right? Similarly, you need to be aware about what can harm your investment portfolio. There can be thousand things coming next. This is just June. By the looks of 2020, I'm sure that neither January, Feb, March, April, May, all of them have come and given us a big surprise. June will be no different. So will be July, August, and September. We need to be really strong. We don't have to be greedy. We don't have to be tempted. We have to manage our risk. Please control your risk, and talk to our market consultants. Have one-on-one sessions with me to how to use the platform. We will keep you notified for the any next sessions we'll have with the technicals. We have another seminar on 17th of June that will be about. So in that particular session, we'll talk about some market neutral strategies. We're not going to talk about stocks in that. We are going to talk about, of course, a glimpse of what is the performance of the stocks, but also we'll talk about some market neutral strategies, strategies which are related with which has nothing to do with market going up and down, it is a kind of arbitrage which we can always try to find within. So these are the anomalies in the market among the pairs. Pair tradings also we'll talk about. So that will happen on 17th. Till then, be safe. Even if you are going out for at work, please be safe. Don't take too much stress about your investments. Very basic: low quantities, high volatility. If you increase your quantities, your losses can also increase. Keep your quantities very manageable. There is a lot of volatility in the market. Try to bank on that. So be careful, be safe. If you have any other questions, you can talk to your relationship managers. They will forward that to me. You can ask my contact details to them. You can directly talk to me about the questions. Book a session for yourself, and we'll talk a lot more about the platform after that, and we will discuss that in detail. Right. So once again, thank you so much. You all are great people. You've asked a different amount of questions. I hope I've been able to answer. If there is anything which you think you would like to, ask, and I have not been able to, provide you the answer to, please reach me out or reach your RM out, and we'll be more than happy also to assist you. Till then, guys, you have attended the webinars. A lot of you have attended the webinars in the past also. It will be really helpful for me if you can suggest some ideas, or at least review us on Google, uh, whether you liked the session or did not like the session or anything. Just review us on Google, and you can find us there. Century Financial uh, would be really helpful for us to keep doing this work. So once again, thank you so much. I wish you a great night. Please stay home, stay safe, and stay invested. That's the most important thing. Stay invested.